Should I really tell him the pattern? Alright, fine, I'll do it. So, you came for the broken pattern, which arguably has one of the highest win rates of any setup out there. I called the slingshot pattern, but first you have to understand how it actually works because it's different from other patterns. See, if I draw this, everyone knows it. It's the head and shoulders pattern, and it's one of the most common patterns you see. But patterns, as you should know, don't actually work. That's because these type of patterns are not categorized as mechanical patterns. But what is a mechanical pattern? See, think about the markets like this car here. No matter what body you put it in, whether it's a Lambo, Ferrari, or Corvette, they all generally run off the same components. You've got the engine, the wheels, the axles, the transmissions, and everything else. So what separates a good trader from a bad trader is that we're mechanics. We know how these processes work and we know how to break them down. And so good traders will form a strategy around how the markets actually function and not just skeptical theories. And so that's why the head and shoulders doesn't work, is it doesn't actually rely on anything of how the markets actually work. And so what I'm going to show you, the slingshot pattern relies on what's called liquidations, which is a core principle of how the markets run. It's a necessary process to clear order books and start a trend. So let me finally show you it. So here is the slingshot pattern. Whenever you see a chop like this, and then you get a big drop down, and then back into the zone, that's your entry long, and it's almost guaranteed if it does come back into the zone, break to the high. This portion right here is known as the liquidation because it's meant to clear the order books and create a healthier move to the upside. Oftentimes this will come from a downtrend, and so when they have this chop like this, a lot of longs get overweighted here, and what they need to do is get these guys out so that when they come back into the zone, they can finally move upwards with little drag. And these liquidations are core principles or mechanical pieces of the market like we talked about. These will not change no matter what time frame you're on or what you're trading. And this works on diagonal parallels as well, and I'll show you a few examples of this. And it even works to the downside. If you have that big spike up and then a retrieval back down to the zone, that's your best entry to go short. So think of anything with a range. This could be a parallel channel like this. Whenever you see a big, huge spike down through that zone, and then all of a sudden a very strong response back into it, that's where you want to buy. Because it's almost guaranteed to come here and break the high of that channel. And you can see another example here. Here we have a parallel channel like this, and then you had a huge spike down followed by a gap down. Based off of that huge buying reaction off of it, it came back into the range, and that point right there, you're guaranteed almost a break to the high. That is once again because they trap everyone in here, and then with that liquidation, they get everyone out who was hoping to go long, and now you can finally surpass that wall. And to identify liquidation, what you need to know is that, let's say we have a big move down. If you get an immediate buying response that's very large right after, that's how you know it's a liquidation. If you don't, it's likely not a liquidation. Because if we don't get that large response right after the move down, or in the case of a liquidity grab up, you get a big selling right after, it tells us there was no climax, and therefore in the future, we likely will see one. All the people who were in are finally out, and now we have a very uncontested move back into the range and back up to the upside. But this doesn't just happen to the downside, it also happens to the upside, and you should be betting on a bearish trade. And so right here's an example to where we had a grab to the upside. Right here, we identified a range starting to develop, and then we saw a massive pump here. Yes, but did that break the range enough for a massive selling period to come? No. And so what we need is an immediate selling period. We did not get it right here. So we had finally a gap up above this range right there. That after hours move was enough to create the climax of buying, and now we start to see the selling come back in. That's how you time the break. Again, this helps with timing moves. If you guys were to try to short right here or right here, you would have gotten smoked if you held for the break of the zone. So Rader, what's our next move to become more profitable? You just taught us something. How do we implement it? I was trained under thousands of hours of professional traders, and what they've taught me so far is once you learn something, you have to implement it. But that doesn't necessarily mean trade it. So the next time you guys see these, next time you see a big liquidation down and a pop back into a range, note it down. You have to have a minimum of 5 observations before you can finally take a stab at it. Because once you're able to spot it 5 times in real time, then you'll be able to go through with more confidence and understand that that next one you spot is likely the trade. Over the next few weeks, try to find 5 observations. And if you want some homework overnight, go back and back test. Tweet at me at RaderTrader101 an example, and I'll give you my feedback as to whether you're correct or not. We're all on a journey, and I'd rather have 10 people beside me at the top of the mountain. Today was short and sweet. If I provided you any value, please consider subscribing, and of course, stay happy, stay humble, stay healthy. I will see you guys in the next one. Peace.
I never switch sides, like even when I die, I'ma ride for the squad, let her ties in the